Okay, happy 2024. It's the time of the year where people start doing their predictions. Are big things going to change? I was looking back at this article I wrote back in April of 2020 talking about does COVID-19 affect the housing market, and then going on to say, was this going to be a once in a lifetime real estate opportunity? And at the time, in the article, I put that there was so much demand that was getting sidelined because of COVID, and that the Fed would come in, that they would drop rates, and all of this demand was just getting pushed forward down the line, and we would end up with this logjam of a housing market with not enough supply, super low rates, and a lot of demand. Boy, was I right on that one. Now, we are looking at a different time in 2024 where we're coming off super high rates falling. Really, we're going to look at the chart quite a bit. The Fed trying to talk tough, but the market predicting more rate cuts in. And so how is that going to affect? Are we going to get some supply? I was listening to a couple YouTube crash brothers talking about market crash still. And in every one of those cases, they can't really say where this supply would come from. So we're going to look at that for a second. And I thought it'd be fun to look at Uhaul. They do a market recap of 2023 and kind of even looking forward on where's everybody going. And how would Uhaul know that? Well, they track one-way moves across the nation, and they put out this list of top growth states in 2023. They calculated with their 2.5 million one-way Uhaul truck rentals. And this is probably not a surprise here in Florida. These are the states where everybody left to one way, going to Texas, number one, Florida, number two. And you can see North Carolina, South Carolina, Tennessee down the list. And of course, bringing up the bottom is no change, California. And you can see some of the other states here that people are moving away from. Now, truthfully, Florida, after doing this for 20 plus years, is always a state that people have moved to. Now, there's all kinds of reasons people come here, not only the great weather, but we have no state tax. It's just a great place to be if you're a business owner, if you want to have great weather. And to me, Florida will always be one of the top places to move. What's more interesting in this to me is that nothing's really changing. You know, everyone's coming to all of these states. We're going to continue to get people. And how fortunate are we to be doing real estate here in Florida? So we really don't have any excuse as far as location, because they say location, 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 and Florida is probably one of the best. But we do need supply like everyone else. We have had supply jump up. If you see, we're finally getting a little bit of supply over the last few months. But really not meaningfully, meaning as rates fall, and they are starting to fall. If you look right here at the 30-year rate, look at this drop from 8%. And this was in November where we kind of topped out. And we are all the way down in the mid sixes, which as rates fall, it's just going to start soaking up that supply because mortgage demand is up. Mortgage applications are up. Mortgage applications is a leading indicator. Obviously, people getting pre-approved and starting to buy now. 30 to 40% of that was refinance, but purchase applications are up over the last couple months too. And that's a trend you're likely to see continue as rates fall. The real question is, can we get any supply to help us out? Because, you know, if you did great last year, and I'm hoping if you're watching this video, you did, a lot of our competition is gone. You know, if you look at like a needle one way or the other, the more that you were on the selling side, you probably did pretty well. And the more that your business is on the buying side, you probably did less well. A lot of people in the mortgage industry, there were not a lot of refinances, and buyers were not coming in the market as much as they normally do. But if you were selling homes, I know so many realtors that had record years last year. And to be honest with you, there are people that I know that work the buy side that did really well. So everyone's situation is unique. But my point is, the buyer demand has not been there, and that's likely to come back as rates fall. But will we get some supply? And this Redfin graph here showing that nearly 9 in 10 U.S. mortgage holders have rates below 6%. But the number I like to look at here, so when you look at the green, these are rates in the 4 to 5%, meaning this green here. And you can see a huge amount of the market have rates 4 to 5%. 3 to 4 is here. And you can see how much this went up in recent years. And then now it's starting to come down because rates have been higher. But all of this supply here is what we call the lock-in effect. Now, rates are predicted to get lower. This is the current prediction by many people. Mortgage Bankers Association at 6.1%, Fannie Mae 6.5%, Realtor.com 6.5%, and Redfin. And you can see National Association of Realtors 6 to 7%, which isn't really a prediction in my opinion. So the only way that we are going to get more inventory is to eliminate the lock-in effect where people start selling their homes. especially as mortgage demand comes online and really everyone thinking that there's going to be more sales next year than last year. So if you look at a $400,000 purchase price, someone that has a 3.5% rate has approximately $1,800 principal and interest payment. At 6%, there's a $600 difference for a lateral move. At 5.5%, there's a $471 difference for a lateral move. And at a 5% rate, it's $350. There is a lot of pent-up supply. People that want to sell, need to sell, jobs change, need more houses, families need to be in a different location because of job, families grown, and they really just can't justify, for instance, if they have a 3.5% rate right now, it's a $600 increase in payment. Keep in mind, you're probably also increasing your purchase price, and that's going to make it less and less incentive for them to move, and that's why you see all these home equity lines of credit and people building onto their existing homes. My magic number has been always around 5%. At 5%, it's about $300 to $400 for a lateral move. And I think as we get closer to that 5, we are going to get more supply, and that's going to start balancing the scales. Unfortunately, in my opinion, in 2024, we don't get there. Now we get closer to there, which will release some of that supply. So I think it's going to be a much better year than last year if you're working on the buyer side. And I think it will tend to be most of the year more as a seller's market, as inventory is not really going to outpace the demand that I think is going to come on the market. Now, what do the experts say? I listen to so many people, these crash brothers online, talking about real estate crashes, but they can never say where supply is coming from. So I like to look at someone that has kind of a balanced approach that makes sense to me. And this is the CEO of Home LLC, and he was the most accurate predictor of 2023. And he talks about what he says for 2024, and you can find this article online. But when you look at his predictions, so they asked him, when it comes to U.S. home prices that you're forecasting in 2024, how do you expect the housing market to look this year? And he said, barring a black swan event, we would predict the housing market in 2024 will appreciate more than in 2023. We project a 4 to 7% increase in the Case-Shiller Home Price Index in 2024 because, no surprise, falling mortgage rates will increase demand. RAI projects a 5 million increase in home buyers for every 1% drop in rates. We've already dropped almost 1.25% from the 8% that we were out in November. And housing supply will remain lower than demand for resales. Our AI projects that decreasing rates will increase demand in a way more than increasing supply. What does that mean? It just means that this year is going to be, in my opinion, barring a black swan event, a better year in 2023, more opportunity if you're on the buy side. If you're on the sell side, keep doing what you're doing. There's gonna be a lot of opportunity there. Things that I think are non-factor this year, the NAR real estate, major AI changes, those are things to be aware of, but they're not really gonna impact our market in 2024. For the most part, what's going to happen is demand's gonna come online. We're gonna be feeling that limited supply again, but it's not gonna be where first-time home buyers were completely locked out when the market was going crazy. What do you do in this? Things are changing so much, markets are changing, there's all these things going on. The number one thing that you can do that will predict your success is if someone came up to you and said, what is your daily success plan to make sure you're gonna have a good 2024? If you cannot say that in language and whip it off pretty quickly, I would say that means you don't have one. We're going to be doing some classes on how to build a DSP, a daily success plan for 2024. But at the end of the day, sit down, think about what are the day-to-day activities you need to do to be successful, find somebody to hold you accountable, and just do that day in, day out, rinse and repeat, and you're going to have a successful 2024. That's my opinion on 2024. If you have any questions on this, loan programs, anything I can do to help, let me know. I'd be honored. This is Rayce Robinson, your favorite Florida mortgage broker. Have a great day, great week. Talk to you soon.